Okay, so good morning to you all once again. We are here on accounting on Omega Vacation Classes. So today is our first meeting and we need to establish where we are so that we can develop our scheme of work together. So to the best of my knowledge, or ideally, you should have covered a few concepts. So let me share the curriculum. Okay. And I want to believe all of you have this material. If not, I'll share in the group after the class. Okay. So this is it. You first have to look at the nature and functions of accounting, which I'm sure we have all done. We have defined accounting. We have looked at the uses of accounting information. I think you are even fortunate we discuss or we introduce you to some of the accounting standards, right? A concept that you are going to develop into details when you get to the university, the accounting standard. But interestingly, these standards provide the framework, okay, for which we are doing this debit and credit and all that. Okay, but you get to appreciate it at the university, or those who would want to sign on to the professional courses, the ICH, ACC, you would appreciate it better. Okay. So we have gone through that. I don't think we need to worry our heads over that. The second thing was to now look at the accounting equation and the double entry principle. And this is where I remember we discussed a few things around it on our last vacation class, right? Then after you look at the final account of a sole trader, then you go on to look at introduction to cost accounting. So this is the bit where I hinted that cost accounting has been merged with financial accounting. Then you have to look at accounting for overheads and costing methods. Yes. So when we talk of overheads, overhead simply means that indirect cost or indirect expenses, material costs, and labor that is incurred during production. Okay, so you get to appreciate it better, right? Then costing techniques and budgeting, right, for control and business decision making. That'll be the last thing on your table as far as Form 1 is concerned. So now let's go back. So where are we now, professors? Back in school, what concepts did you finish or did you look at? And then we can agree to working on our scheme of work. So like I always do, I'll take you one after the other. Then you tell us, right? Okay. Or if we want to do it the school base so that one person from a particular school gives the issues they covered and it applies to all students, right? Unless maybe that will not be the case. Okay, so Gabriel, you are first on the list. Where did you get to? What are some of the things you discussed?
Sir, please, we reach petty cash book.
Petty cash book. Okay, that's good.
Yes, sir.
Okay. Prof. David Yambo.
Yes, sir.
Is it the same for you? You got to the cash, petty cash book?
Sir, please, we go to balance sheet.
Balance sheet. So that is in the realms of the final account, eh?
Yes.
Or it was around the accounting equation your teacher, gave you the framework for the balance sheets. I want to be clear about that.
It was around the accounting question.
Okay, so you haven't veered into the sole proprietor's financial statements, i.e. trading account, profit and loss account before the balance sheets, right?
Yes, sir.
Okay, awesome. I think Fifi Nati to be the same for you because yourself and Abuko are in the same college. Hey Larry, let's hear you. Prof. Hillary Ablo. I think Hillary probably might not be hearing me. Prof. Janet.
Please say we reached the double column cash book.
Double column cash. Great. Okay. And may I hear from Nicole?
Sir, please, we've gotten to introduction to cost accounting.
Okay, so that is an indication that you finished the financial statement of a sole trader, right?
Yes, please, but yeah.
Wow. With all the necessary adjustments, end of year adjustments.
Yeah, we touched on the adjustments.
Okay, let's put things in perspective. Is it the case that maybe it was some form of vacation assignment, so the teacher just had to touch and go, kind of?
No, please. We actually did it in the class. And then he gave us the adjustments and all those stuff.
Wow, then that's quick. Okay, so well, let me hear from Stacy, and then maybe I'll make some concluding statements on that. Stacy, can we hear you? Prof. Stacy. Okay. So yeah, Stacy, take it again. Yeah.
Double entry principle.
Oh, okay. So is it not so surprising that Nicole is, flying in the skies, and most of us are, now crawling? Well, I can understand,
So
different
he's my
schools.
teacher. He wants us to finish the book before we go to Form 2.
Well, yes, that is a good thing, but I hope he's not compromising, your understanding with completion of the syllabus. Okay, so I think this gives a general view of how things are going on in the various schools, how teachers are struggling, and how some are also improvising to get the deal done, regardless of the constraints we find ourselves. Because realistically, we are constrained with this system, right? We are praying that we would revert back to the old, term system where we have our first term, second term, third term in that order. Okay. But I think you are even at the good side because your current Form 2 colleagues would be writing their WASI next year, April, right? And you are fortunate. So, well, so that's the deal. So, in order for us not to be repeating things that have been done, this is my suggestion. Of course, students can always bring in their input so that we agree. I remember doing the double entry with you to the best that I can. Okay. Well, I'm sure there are a few things to iron, but generally, I think it should be okay. So the thing about the day books, cash book, and the petty cash book thing, I think majority of you have done it, except one or two, right? So if it is the pleasure of the house, I may want to begin from the final account, okay? So that I get you to appreciate that topic so well, because it's one of the highly examinable areas and can be very confusing, okay? But that notwithstanding, if we have to go back and probably pick the day books and walk through to the cash book and petty cash book, of course, I'm willing to take that suggestion as well. So let's agree. What do you suggest? Do we go straight into the final account? Yes, Nicole. Yeah, Prof. Nico, you have the floor, so let's hear it.
You were asking, and I raised my hand to agree.
Yeah, so give us your suggestion. What do you, or you are in, you are in agreement with my suggestion?
Yes, please.
Okay. But, like I always say, if for some reason you have an issue with the double entry debit and credits, maybe you've done the cash book, you are too confused. That is why you need to create your private page. You can put questions there. I can do a short video and send to you for you to understand. In fact, I have previous videos on these topics as well I could share. Where you still feel you need extra help, I'm available. We could schedule a 15-30 minutes one-on-one class, or a 30 minutes, 15 minutes class with all those who are interested in that particular concept. We discuss, okay? So, in fact, make judicious use of the teachers you have on Omega, okay? That's the best you can have. Some of your colleagues don't have this opportunity. Okay, so house, are we in agreement that we should start from the final account of a sole trader? Because besides Nicole, all of us would appreciate taking that topic. And even Nicole, I can I can predict, or should I say, I can assume, or I can conclude, which is the best statement. Anyways, that maybe she would want to go over it again. Because Nicole, is that the case?
Yes, please.
Okay. So Abeko, let me hear you.
So like I was saying, like we could start from like the cash book, then we'll continue to the the final account of a sole proprietor.
Okay, so your suggestion well noted, but you see our timing is too short, right? We besides this week we have barely 3 weeks more. Okay, so and we meet twice a week. I doubt we can do enough in the financial statement when we go as far as the cash book. Okay, then it will be me rushing you through concepts because we want to finish and come to the final account. But trust me, I'm going to present the concept in a way that you would not be found wanting. So yes, I appreciate that you needed some foundation from there to apply here, but trust me, it's not going to be so difficult in the regard, right? So we can do the cash book, those things, privately in your private pages. Put the question there, say, I'm confused about this. Okay, do this, watch this video. Okay, let's meet this time. Let me explain things more further so that we can cover, right? But I'll be glad if you can see this final account. I'm sure most of you will meet it. Most of you will meet it next term when you go back to school, right?
Yes,
Okay.
sir.
So Gabriel and Nicole have spoken. The rest of you, speak to me now. David, are you cool? Emmanuel, cool? Hilary, Stacy, and Janet.
Please say if It will be okay if we start with the financial statement of a sole proprietor.
Okay. Okay. I'm waiting for the rest. David, Hillary, Fifi, Nati.
Please, I think we should do so.
Okay, so, well, I guess I'll take your silence as a yes. So we'll pick the final account of a sole proprietor, right? And then we'll look at it. Ordinarily, I wouldn't teach today, but I think no, today I'm breaking that code. So we are going straight into that topic, final account of a sole trader. So Nicole, since you have, some form of knowledge here, you are going to assist us a lot. Okay. So final account of a sole trader, final account of a sole trader. Now, professors, if you appreciated the accounting process, right, then you appreciate that when the accountant collects the business transaction, he classifies and records the transactions. Okay, after recording the transactions, he posts them to the ledgers, and it is in the ledgers where we do the debit and credit. We open the T account and do the debit and credits. After that, the accountant goes ahead to summarize, and in summarizing, the accountant prepares the trial balance. And I believe you appreciate what I've said so far. After preparing the trial balance, the information does not still make sense to users. So the accountant will now use this trial balance and prepare financial statements at the end of the accounting period. Remember, we said that every business has an accounting period, and it is normally 1 year, 12 months. So every 12 months period or every 1 year, you have to report on your activities to interested users. So the accountant will prepare this financial statement at the end of the year to be able to give better information to the users of accounting information. So these financial statements the accountant prepares at the end of the accounting period is what we refer to as final account. Please, did you get the points I just established?
Yes, please.
Okay. So you can appreciate that after doing all the debits and credits, where you open sales account, you open purchases account, you open all the accounts that you open, Kofi, Ama, building, land, cash account, all those small accounts that you were opening or preparing. At the end of the day, you summarize them by balancing them off with the balance carried down, balance brought down, and then you extract a trial balance. Okay, so in your trial balance, you appreciate that you see these items, the sales, purchases, returning was. Okay, then you balance to get a total. It is this trial balance we are going to use to prepare these final account. So having said that, let me write a definition of final account. And based on what I've said, I want to believe that professors got something, that final account are financial statements and account prepared at the end of the accounting period. And there's a reason for preparing these final accounts. The reason is to determine performance and the financial position of the business. Okay, so I'm really taking my time so that I don't confuse you. So final accounts are financial statements and accounts prepared. So note some of the key things. Prepared at the end of the accounting period. And I've indicated to you that this accounting period is 1 year or 12 months. Okay. To determine performance. So we prepare these statements to determine performance. Is the business performing or not performing? Okay. And here the judge of performance is profit or loss. Is the business making a profit or a loss? So let me put it in here. That by performance, we mean whether the business is making a profit or a loss. Okay. And the financial position. Professors, when we talk about financial position, the focus is on what assets does the business have? What liabilities are they expected to settle? And how much investment does the owner have in the business? And using the right terminologies, we say we are talking about the assets, the liabilities, and the capital or equity. So final accounts are financial statements or account prepared at the end of the accounting period to determine the performance and the financial position. Performance here, I mean, we are only looking at whether the business is making profits or making losses. And financial position will just be we knowing or the users appreciating the assets, liabilities, and the equity or capital the business have. Okay. But you see, if we look at the various forms of businesses we have, not all businesses are sole proprietors, right? We have the companies, we have the non-trading organizations, so our focus will be on sole traders, right? Or sole proprietors. That is our focus. So now let me list the final account of a sole trader. There are 3 of them, 3. So there are 3 final accounts of a sole trader. Companies have more than that, okay? But you get there. I'm sure somewhere in Form 3 you get to appreciate it. So 3 final accounts of a sole trader. And Prof. Nicole, can you assist us in listing these final accounts?
Sir, please. One is the income statement.
The income statement, okay? And then the next one?
The balance sheet.
The balance sheets, okay. So in some books you see 3, in some books you see 2, but let me start from 3 and then maybe I'll help you appreciate why sometimes it becomes 2. So the first one is the trading account. Trading account. The second one is the profit or loss account. The third one is the balance sheet. Now I'm using these classical terms. I'll give you the modern terms, right? Because you have to, reflect the modern terminologies. Now, the trading and profit and loss account has now been referred to, or is now referred to, as the income statement, as Nicole mentioned. Income statement. Okay. And the balance sheet is now referred to as the statement of financial position. Okay. So the trading profit and loss account is jointly referred to as income statement, but in some books you see them combining the trading and profit or loss account. Okay, but you can refer to them as the income statement. Let me see if I can insert some shape here so that I can write. Okay, so let me put it beneath here so that in fact, when you advance to the university, these things will change into statement of profit or loss and other comprehensive income, blah, blah, blah. So, well, we are building on the foundation. So let's appreciate it as it is now, right? So key terms, key things to keep so far is final accounts are prepared at the end of the accounting period, not the beginning, at the end, right? And let me help you appreciate this accounting period. I indicated to you that it is 1 year or 12 months, but it can differ, okay? Some businesses have their financial year as that of the calendar year. And when I say calendar year, I hope you understand. That is our normal 1st January, right? 1st January to 31st December. That's a calendar year. Okay. So some businesses start from 1st January, they end 31st December, 12 months, 1 year. Others also have, varied dates. Some can begin 1st February and then end. Let me do this quick test. If we were to start business 1st February 2026, when do you think we'll have to close or end the accounting year? Oh, this one I thought is going to be, just like 1 + 1. You say the period is 12 months. So if you are starting from 1st February 2026, when are you going to end? Yes, Gabriel.
So, is it that January 31st, 2027?
Exactly. So you end at 31st January 2027, because that time will give you the full 12 months. So that is to make you aware that some of the accounting years may begin in 1 year and end in the following year, right? So they will be overlapping. The common ones you may come across is when the business, for example, starts from 1st April and then they end. So if we start 1st April, you do the counting, 12 months, right? So April, May, June, July, August, September, October, November, December, January, February, March. they will end 31st March of the next year. So you come across these accounting period too. And I think the last one is from 1st July to 30th June of the following year. So these are, points for you to keep. Okay. So are we comfortable with the accounting period and all that? We are just dealing with dates. Count 12 months from where you are beginning and you know the end. Okay, so when they give you the end date too, you can determine the opening date by reversing or counting back 12 months. Okay, great. So final accounts are prepared at the end. So you see either 31st December, 31st March, or 30th June at the end. Okay, not at the beginning, at the end. Now, we have just established that the essence of preparing this final account is to determine whether the business is performing. And performance here means, is the business making a profit or a loss? And also to determine the financial position. And in accounting, when you hear of financial position, it means we are talking about the assets, the liabilities, and capital. So you can use your accounting equation to get that concept, right? Now, I've just indicated to you that for a sole trader, the three final accounts to be prepared is the trading account, profit or loss, and the balance sheet. But I've given you the modern terms for these accounts, that the trading and profit and loss account can be combined into the income statement. And then you have the balance sheet as the statement of financial position. Any questions so far? Any question? Are we cool with it?
Yes, sir.
Okay. There are other professors who don't respond, no. Is it the case that you can hear me or you can't hear me? I'm speaking in the domain of professors like I think Kwame Nai is hiding his voice. And then Hilary Ablo. Don't hide your voice, please. Let me hear your voice so that my headache will go away. Okay, so now let's advance the discuss further. So professors, all that you need to do is to be able to prepare these final accounts. That's your expectation in this topic, that you should be able to prepare them, right? But we need to understand, few things before we can comfortably prepare. So let's pick the trading account. The trading account. And please pay attention. What is this account? And Prof. Nico, I'm coming back to you. You are my teaching assistant today. So Prof. Nico, trading account, talk to us about it.
Okay, so from what I remember, trading account shows the net income of a business.
It shows the net income of the business. Okay, advance further. What else did you note?
It's the difference between the sales and then forgotten that one. Cost of sales.
Okay. Are you going to add more, or is enough for a teaching assistant?
Yes, please, it's enough.
Okay, so yes, I appreciate the sales and cost of sales, but the net income, I think I'll pass on that one. So the trading account actually is prepared. So it's prepared to determine or calculate. Sometimes the English confuses you guys, or you professors, I should say. So it is prepared to calculate or determine. Let me use the calculate. That sounds more realistic to you. The gross profit. So, Prof. Nicole, is gross profit, not net. So, gross profit or gross loss of the trader. In an exam, they can ask you what is the purpose of preparing a trading account or what is a trading account. My professor just states that this is an account that is prepared to determine gross profit or gross loss. Now, if you want to advance it further, then you have to explain to us what gross profit is and what gross loss is, right? So gross profit or gross loss simply means the profit or the loss you are making from buying and selling goods or merchandise. Is the profit a business is making or the loss a business is making from buying and selling of goods or merchandise. We haven't done anything technical. We have just substituted trading with buying and selling because we all know that trading means buying and selling. If somebody is a trader, it means the person buys and sells. So gross profit or gross loss is the profit you are making from buying and selling. Is that not simple? So now let me ask my professors. I think you all appreciate that.
Take it again.
I should take it again. Okay, let me write it on there.
Yeah.
So gross profit or gross loss is the profit or loss made by the trader in buying and selling of goods or merchandise, or some would say merchandise, goods or merchandise. Let me add only. So how many of us here, have parents who are in some form of buying and selling? It could be a vehicle. Maybe some of your parents are, dealers in vehicle. They buy and sell vehicles. Some may be dealing in computers, phones. I want you to share so that we can put the discussion in more real terms. Is any of us here having a parent? It could be wig. Some of us, our parents buy and sell wig. Or I think now the Brazilian hair thing has faded out. I don't. Our ladies, are you still wearing Brazilian hair? Oh, the ladies will not mind me.
Please, Hilary Ediko, please answer for us. And Janet.
Okay. The lady says, Mr. Moore, you want today, I'll talk today. Well, currently they are in school, so they don't need these things, right? But I know when they grow up, they'll buy. I think the modern one is it Bone Street or Bone Street? Bone Street. Or that one you don't know. Okay.
So please, what's that?
I don't know. It's the ladies who can tell us. But anyway, let's continue. The gentleman too may be dealing in, buying and selling of shoes, or what they call their footwear or etc. So any experience to share, if your parent is doing some form, or even if you yourself, you are doing some form of buying and selling. Oh, no response? Anyway, let me continue. So the profit you are making from just your buying and selling, that's your gross profit or gross loss. Now, how do you determine or how do you calculate this gross profit or gross loss. So I want to now, you see, if you had shared the experience, then I would have asked how your parents calculate their profit. But since all of us are silent, let me continue. You people, you have made me sad. I asked you a question, I'm not minding. Anyway. So I'm even sad. I don't know what to say. Yes, so I was talking about gross profits or gross loss and how you calculate it. So I want to take us to JHS where we're finding profit or loss. Okay, we all went through JHS and we all came across this profit or loss, right? How were we determining profit back in JHS? Let me speak to Prof. Mauli Agbenyo. You remember you were calculating some profit or loss at JHS. They were giving you some figures and then you subtract and do things. That's what I want you to share. Prof. Mauli. Okay, so Janet, you can now tell us how you were calculating profit or losses back in JHS.
Okay, so for the profit, to determine profit, it was the selling price minus the cost price.
Very good, very good. So back in JHS, what you did was you were using these terminologies that profit is equal to selling price, and we used to shorten it SP minus CP, selling price minus cost price, right? So when the selling price, for example, is 10,000 and then the cost price is 8,000, then we say the person has made a profit of 2,000. Now, if it is the opposite, where maybe we have selling price of 8,000 and cost price of 10,000, then we say that the person will make a loss. So now we change the formula and say loss is equal to cost price minus selling price, right? And we'll calculate it and we're so happy. It is the same idea here because we are looking for, at the end of the day, we are looking for profit or loss. So we are going to subtract something from something, but here we are not going to use the term selling price, cost price. We are going to use the term net sales minus cost of sales. So please take note of these terms. Net sales minus cost of sales. That will give you your gross profit. So the net sales here is being is representing the selling price, and the cost of sales is cost price, right? So if it is a loss, then you can change the formula and say gross loss, right? Gross loss is equal to cost of sales minus net sales. Okay. So that's how you determine gross profit or gross loss. Any question? Okay. So you see, as we build on, new terms come in and we have to know what those terms are. So now the question is, what is net sales? What is net sales? And what is cost of sales? Okay, if we build on that gradually, then the trading account will be making sense, right? So again, Nicole, my teaching assistant, I won't pay you any salary. So what is net sales, Nico?
Sir,
Oh,
please.
Nico, because I'm not paying you, it's
If
not
it's
work for me. Okay, I think I'll spare my teaching assistant and move on. Move on. Okay, but if you want to talk, you can, Nico. Yeah.
Sir, please, I've forgotten.
This my teaching assistant. I have to put you on suspension. Okay, so net sales is simply your total sales minus return inwards. Return inwards. Your total sales less return inwards or minus return inwards. And I think now we don't need to go further because we all know what sales is and what return inwards is, right? So the total sales here is a representative of both your credit sales and your cash sales. All together gives you the total sales of the business. Then you subtract any return inwards. And I think we all appreciate return inwards referred to the amount of goods customers have returned back to the business. So let's do an example. If Omega Accounting, we form a company, let's say Omega Accounting Company, and then we sell shoes. If we sell 20 million worth of 20 million Ghana cedis worth of shoes, and then some of the customers, they say, oh, the shoe is bigger than the size is bigger, or maybe the color, they don't like it, so they return it back. Then we, the business, will first say that we have made a total sale of 20 million, but the customers that are returning it back to us, that is returning us. So we'll subtract it from the total sales and arrive at the net sales. Please, is that okay?
Yes, please.
Okay. Now, we are comfortable with net sales. Let's go to cost of sales. Cost of sales. And that's where the issues are with regards to the trading account, the cost of sales. Cost of sales. Now, cost of sales entails a lot. Unlike the net sales, where you have just two things, the sales and then the returning was. The cost of sales, you require a lot of things to be able to calculate your cost of sales efficiently, right? So I wanted to give a scenario so that you can appreciate, but I think I'll go forward with telling you about how we calculate the cost of sales. So the first thing you think about when you are calculating your cost of sales is your opening stock. And when I say opening stock, I think professors appreciate that this is the amount of goods that the business had at the beginning of the year. So that means that maybe these goods were there from last year or the previous year, and we are bringing it into this year. So it becomes an opening stock to this year. So if we were selling computers, and then we had some computers in 2025, which we have entered into 2026 with, then that is the opening stock of computers we have in the business. Now, this opening stock, you add, so plus what we call net purchases. Net purchases. So we already had some of the computers from last year, and that's what we are referring to as opening stock because we have brought it to this year. Net purchases refers to the computers we are going to buy or purchase within the year 2026. So let's say that the computer we had from last year is just 2. Okay, and our customers are plenty, so definitely we need to buy more. So maybe we'll go and buy more in the year 2026. That becomes purchases. But then you have to consider things like return outwards, because it's possible if we go and purchase the computer, some may be faulty and we'll return it back to the supplier. So this is your net purchases. This is how you find your net purchases. It is your total purchases minus return outwards plus recording progress. Okay, so your total purchases minus return outwards. And we all know return outwards is the brother of returning was, right? Or maybe the sister. Plus carriage inwards. Now, I need to help you appreciate why we are adding the carriage inwards. Okay, now, professors, cost of sales technically means all the costs associated with getting the goods ready for sale. So if you are buying and selling computer, okay, your cost of sales involves all the costs that you have to incur to get the computer ready for your customers to come and buy or ready for you to sell. So let's take a scenario where your business is in Cape Coast and your supplier is in Accra. So you go to Accra to purchase your computer. If you purchase the computer in Accra, your shop is in Cape Coast, meaning your customers are in Cape Coast. If you don't bring the computer to Cape Coast, can your customers buy? So until you transport the computer to Cape Coast, the goods will not be ready for you to sell. So you add the transportation cost, and that's the carriage inwards, the cost of transporting the goods from the supplier to your shop. Okay, that is the carriage inwards. And you need to add it in determining your net purchases. Okay, great. So you see, you add your opening stock to net purchases, but I've expanded the net purchases to be total purchases minus return outwards plus carriage inwards. Okay. Please, any question? Let me slow down a bit. Any question? Have I confused you? Yeah, Prof. Jane, let's hear you. What's your question?
So, say, do you mean that the total purchases minus return outwards plus the carriage inwards is the net purchases?
Exactly. All
Okay.
other things being equal. Yeah.
Thank you.
Okay. Any other question? And listen, as funny as it may sound, you can have simple questions like briefly explain net purchases. And then you are like, how? You don't need to be surprised. You just have to say net purchases is your total purchases minus return outwards plus carriage inwards. You get your full mark. Okay? Yes, Gabriel.
So please, can you explain the carriage inwards again?
So carriage inwards refer to the costs of transporting goods from the supplier to the business premise. Okay.
Okay, sir.
So if you own a bookshop, okay, but then you go to And let me even use, some of the vehicle dealers in Ghana, they import it from UK, China, Germany, etc. You see, your customer, the people who are going to buy the car, they are in Ghana. So if you don't bring the car from USA or you don't bring the car from China to Ghana, can you sell the car? No. So in bringing the car from USA or China or Germany, you have to pay for the transportation, right? You have to carry it from China to Ghana. And this carriage cannot be on your head. Of course, you either use the ship or the aircraft and you pay. And in accounting, we are saying that because this transportation cost was necessary to get the car here or the goods here for the customers to buy, then you have to add it to the purchases or to the cost. Okay. So those of you who are doing business, let's say this vacation, your friend told you, oh, when you are coming, buy me a bag. So you go to the person who sells the bag, you purchase the bag, let's say 120 cedis. And then when you come to school, you tell the person that the cost is 120 cedis. You are really making a loss. You should be able to factor your transportation. Okay? So that's the point here. Any further questions? Yes, Gabriel.
Sir, please, do they have carriage outwards?
Of course, we have carriage outwards. So carriage outwards is the opposite of carriage inwards. Okay? Inwards is from the supplier to your shop. Outwards is from your shop to your customer. Okay, but that one is not seen as a direct cost because there are scenarios where your customers come to your shop to buy. Okay, they come to your shop to buy, so you don't incur that carriage outwards cost. So it is not, how do I put it? It is not a cost that you have to incur before you sell. But when we talk of the carriage inwards, it's a cost you have to incur before you can sell. Are you getting the picture?
Yes, sir.
So we add carriage inwards, we don't add carriage outwards. Carriage outwards will be in our profit and loss account as a selling and distribution expense. Okay, I think as we go deeper or further. Dennis Lefebvre, you want to make a point? I see your microphone is unmuted. You can go ahead. If for some reason your microphone is not working but you want to talk, you can use the chat. Okay, I would gladly read it to the class. Prof. Mauli, I'm still waiting to hear from you. Okay, so now let's continue the argument. Let's continue. Okay, so after getting this, your net purchases and adding it to opening stock, you get a certain figure, okay? That figure you get is called cost of goods available for sale. Cost of goods available for sale. And let me make it more, sound more real to you. Professors, listen. The whole idea is you are a trader. You had some of the goods from the previous year. Okay. And then you brought it to this year. That is your opening stock. And this year you have also bought additional goods. Okay. You have subtracted return outwards, you have added carriage inwards, you have your net purchases. When you add these two together, then we can say this is the goods available for you to sell. Okay. So when you add your opening stock to your net purchases, you arrive at what we call cost of goods available for sale. Cost of goods available for sale. Let me use your school scenario. You are now in Form 1. Is this second semester?
Yes, sir.
Yes. So you see, when you come back to school, that will be Form 1, Form 2, right? So
Suppose we are still in form. We are still in second semester.
so you come and complete. Okay.
Yes, sir.
So when you come back to school, you are still in second semester. So it means your accounting period is second semester. Now, you already have some books from first semester, which you carry to second semester. And that is your opening stock, or let me say here, opening books. The books you brought from the previous semester. Okay. And definitely in the second semester, you buy extra books, you purchase. Okay, so after adjusting all the returns and all those things, you still bought books. So the books you bought second semester plus the ones you brought from first semester together becomes your books available for you to read. So linking it to this, the stock you brought from the previous year plus what you purchased during the year together gives you the cost of goods available for sale. I think now it makes sense. Yes, there's a question. Go ahead.
Suppose so the cost of the goods available, is it like the opening stock then the net purchases that will give you the cost of the goods available?
Exactly the point I'm making.
Okay, sir.
Good. And they can ask you to explain cost of goods available for sale. What is it? You just tell us it is the summation or is the addition of opening stock to net purchases. That's all. Maybe if you want to expand further, you say net, but the net purchases is your total purchases minus return outwards plus carriage inwards. Yeah, that's all. Okay, now when you get the cost of goods available, you are not done. You go ahead to subtract closing stock. And I'll explain why we are subtracting closing stock. But let me test my professors more. If you know that opening stock is the goods at the beginning of the year, then what is closing stock? Prof. Larry, I think you can assist me on this one. You can be my teaching assistant. What is closing stock? Borrowing knowledge from opening stock. Prof. Larry. Okay. I think, David, you are struggling with network issues, but you are back. That's good. And Dennis is also off. Well, fortunately, I think I've been able to record the lesson smoothly, so I'll share immediately after the class. Prof. Larry, can we hear you? You may want to pass it on to another person, no problem, feel free. Just tell me, say, pass it on to Janet or Nicole or Stacy. Okay, so I'm passing it on to Stacy. Prof. Stacy, closing stock, what is it?
She said,
Closing stock, what is closing stock?
"Listen, please pass it to."
I should pass it on. But did you get the bit about what opening stock is?
I don't think I heard when you were explaining that.
Oh, your network, and so you didn't hear me.
Yes, please.
Okay, then let's allow Janet to tell us, and then I think Fifi is also up. So Janet, let's hear you.
Sir, please, the closing stock, they are the goods left unsold at the end.
So the goods the business has not sold at the end of the period. Okay. Ima, you have something else or same?
Please same.
Okay. So yes, closing stock is the stock of goods the trader has in her shop at the end of the accounting period. What it means is that she was not able to sell those goods. Okay. So for the purposes of Stacy getting the opening stock is the stock of goods at the beginning of the year. That's why it's opening, right? At the beginning. And then closing is the stock at the end of the year. Okay. So you see, we are subtracting that stock from the available. Why? Because we want to know the goods we have actually sold. So let me use your semester example. If you brought 10 books from first semester to second semester, okay, so you brought 10 books, that's your opening stock. And then during second semester, you purchase some other books, let's say about 20 of them. That together, you have 30 books available for you to use. Then at the end of second semester, okay, you were not able to use 12 of the books. Then the question is, how many books have you used? It's a simple mathematics of getting the books that you had available, which is 30, minus the books you were not able to use, 12. And that'll give you what? 18. So the 18 now reflects the books you have actually used. So in this case, when we less the closing stock, what we will get is the cost of goods sold, the cost of goods we have actually sold. Okay. So let's say we had 20 million available. We were not able to sell 5 million. If you had 20 available and you were not able to sell 5 million, then the question is, how much did you sell? It is the 20 minus the 5, and that will give you what? 15 million. So that is how you determine the cost of goods sold. So when you less the closing stock from the cost of goods available, you get what we call cost of goods sold. And we are getting closer to our cost of sales. When you get this cost of goods sold, the last thing you do is to add what we call trading expenses. Trading expenses. And when I say trading expenses, I mean all the expenses again that went into getting the goods ready to sell. So I am a trader buying and selling computer, right? I go and buy the computer, bring it to my shop, but I need people who would carry the box, position it somewhere. I'll need somebody who might be doing some, assisting for me in the shop. Any wages I'm paying or anything I'm paying, any cost I'm incurring. Sometimes it can even be that before I can open my shop, I have to pay a market toll. If I don't pay the market toll, they will not allow me to sell. And if they don't allow me to sell, my customers cannot come and buy. That's why I'm saying that any expense that is necessary for you to be able to get the goods ready for sale should be part of your cost of sales. And that is why we are adding this trading expense. Having said that, the common trading expense you will see at your level is wages. And professors, listen carefully. Wages. Just wages. In some questions, you see wages and salaries. When they combine salaries to it, no. It's only when you see wages alone in the question, because wages are seen as direct expenses to trading. Okay. So you see what we had to go through to be able to determine the cost of sales, right? Great. If you have these things, then your trading account is sorted out. But you see, I have gone the normal equation way. In accounting, we are big on presentation. So you don't present it this way. We present it in a nice format. And the format I'm going to introduce us to it. But before we do that, let's all do this together. Let's know the items you need to prepare your trading account. We are going to do that together. When I say items you need, I'm referring to all the things that you were doing first semester: sales, purchases, return outwards, building, land, cash, bank. Which of them do you need to prepare your trading account based on what I've said so far? And I'll start by saying that the first thing you need is your sales, right? You need your sales. Apart from your sales, what else do you need, professors? Oh, please don't keep quiet too. Otherwise, it means all the things I've said you didn't. You are making your teacher cry. Like, seriously. I've given the first item, sales, and I should give you the clue. Just mention them for me now. Okay, let me mention him. David. I know you were not here throughout, but I know you can give me a positive feedback. Hello, professors. Okay, Fifinati, let me hear you.
Sir, please purchases.
Good. We also need purchases. Thank you very much. What next? Yeah, am I the Nicole?
Sir, please return inwards.
Return inwards. Prof. Janet.
Sir, please, can you pass it on? I'm thinking.
Janet, I'm not expecting you to think about this one because we've just gone through the items. It's just about you mentioning them for me.
Okay, sir, the opening stock.
Opening stock. What are you people thinking? Or you didn't get my question? Yes, what's the next item? Stacy, add one for me.
Closing stock.
Closing stock. So you know the thing, but you are not sure is what I'm asking. Wow. Anyways, so okay, you might add on. Fifi, add on if you yes. Take it again. I didn't hear you.
Sir, please carry it inwards.
Carriage inwards. Thank you. Carriage inwards. Of course, we have the return outwards. I think it's left to the last one. Who can add the last one for me? Yes, Fifi.
Wages.
The wages, the trading expense, wages. Good. Because you can have other forms of trading expense, I'll prefer to write trading expense and be specific wages. Okay. So you see that it's actually shocking that we've mentioned these items. I don't know why you were confused though, but anyway, I can understand. This is the first time going through some of these things, so I can understand. I hope next time you will not disappoint me, right? So you see the things that we went through to get the net sales, the cost of sales, those are the items I'm requesting from you, right? So you see, we need the sales, we need the return invoice to be able to get the net sales. So if I ask of items you need your sales, you need return invoice. For the cost of sales, we had to start with the opening stock, bring in purchases, return outwards, carriage invoice, closing stock, and then the trading expense. So these are the items you need to prepare your trading account. So professors, it means that there is nothing like furniture, fittings, land, building, cash. You see all the things you did in Form 1 when you started the trial balance. You see that none of them is appearing here. The things appearing here are sales, purchases, return inwards, return outwards. Okay, that is how I want you to conceptualize the whole idea. So when you are preparing trading account and you see building and you carry it into the trading account, I won't continue. When sales is there, purchases is there, then you leave sales and purchases, then you go and start your trading account with building. I'll meet you in heaven. Okay, so are we comfortable up to this point? I think I will share the format later, okay? But if you appreciate what we've done so far, I think I'm okay. So let me allow you ask questions. Question time. Okay, so if you are not asking questions, then it tells me that you have fully understood whatever I've done, right? Okay, so I really wanted to show the format, but maybe I may confuse some of you. So for now, let's just appreciate the things we will use to prepare the trading account, and then we can get to see the format in our other lessons, okay? I hope that is fair. Or better, so I can ask you to go and read around the format. Are we okay?
Yes, sir.
Okay. So if there are no questions, the format is simple. We just begin with the net sales. So it's like you bring your sales, you less the returning was, okay, and then you go and calculate the cost of sale. But I think we'll do that in our next lesson and see if we can solve some illustrations, and my professor should be comfortable preparing the trading account. Then we can advance further, hopefully same next week, into the profit and loss account. And maybe the following week do the balance sheet, and then we can solve questions and wrap up. Okay, so professors, thank you very much for making today's class. No comments there, but thank you for being here, and I hope that you appreciated the concept we have discussed so far. I'll see you the next time so that we advance our discussions. But pending that, please create your private pages. Based on this small thing we have done, I can put a short test on the page for you to do. and submit for marking. Okay, so thank you very much.